The best time to start investing is right now because there is no perfect time to start investing. Just like there was no perfect time to start these videos. I've got hot spots in the green screen behind me, poor lighting, not the best sound, but you have to start sometime. So you might as well start now. This is just for entertainment purposes. Do not take anything I say as an investment advice. Check out any investments that you see that I might say talk about on this channel. Make sure you do your own due diligence and make sure they fit with what your goals and investment needs are. Okay. So you've probably heard that you should save 10%, 15%, whatever, depending on your age and how long before you retire to get started investing and for retirement. If you're doing that, that's great. This video is probably not for you then. But if you've heard that and you just can't find the money to do it, there is some cheaper ways to get started. If you start with Robinhood, if you used a reference link, which I will have one below, but there's nothing special about any of these links that I'm going to provide. If you know somebody who's using Robinhood, you're probably better off getting their reference so that they all get the free stock. Because the way it works is the person who's signing up gets a free stock or stocks depending on the platform, and the person who refers you get free stock or stocks depending on what the program is and how long it runs. So I will have links below that you can use if you don't know of anybody using a platform that you want to use. But like I said, if you know a family member, a friend, coworker, there's nothing special about mine. You can use theirs as well. So what you need to do for Robinhood, if you sign up and link a bank account, then they will give you one free stock, and they'll give me one free stock or who's ever reference you're using a free stock also. So there is a little work. You do have to, on all these, you have to give them your social security number, address, and all that stuff because the government needs that for tax purposes and to make sure you're not money laundering and things like that. So there is some stuff which I was a little hesitant about doing when I first signed up for some of these accounts because I'd never really heard of them. They're new, but and one of them I had to give even a copy of my driver's license because evidently the information I provided didn't match up well enough for them. But so far, it's all worked out fine. Robinhood has had some issues lately. They say they haven't been hacked, that people just use the same passwords for their email and other sites as they do on Robinhood. So I suggest you don't do that. Get a password manager, even if you have to write them down, which isn't the best, but just do not keep them all the same. I know it's easy. I used to do that, but no longer. Okay, so Robinhood, you just have to link your bank account and they'll give you a free stock, usually around $10, but they do go higher. But the odds are you're going to get one worth $10. So Webull will give you a couple free stocks right now if you deposit $100, which is quite a bit of money. You don't have to invest it, you just have to put it in your account over there and leave it set for a little while, and then you can take that back out. So if you have $100, you can just transfer over, leave set, get the free stocks, transfer back out, and keep the free stocks. You can do it that way. M1 financing will give you, I believe it's $10 if you deposit $10, and also the referring link will get the $10 also. So you can get some free money that way. I think you do have to leave your original $10 in there, so that there is a cost with that one. Now, Robinhood and M1 Finance both allow you to buy fractional shares. So if you get a share in something that does not pay a dividend or you do not like, you can sell it and buy something else, even if the other stock is more expensive. You can buy a partial share of it and get the dividends from that partial share, which helps with reinvesting because you're not going to get a whole lot off a dividend on a $10 stock. Maybe 7.5 cents, 8 cents a quarter, which isn't a lot, but it'll get you started. You can see how the stocks move around. You can watch them. You can, if you do the math, it does get kind of depressing because it does take quite a bit of money at 3% to earn enough to retire or be independently wealthy. But like I said, you can see how it's going, get familiar with it, get used to the platform. And I do recommend getting like an aristocrat. Those are stocks that have paid dividends consecutively and increased them for so many years. One of those to start off with. I wouldn't try to think you're going to get the next Amazon, Microsoft, Tesla, something like that. Uh, you might, but the chances are you're not. With at least a dividend, you are getting that steady income, even though it's just a few cents, probably a quarter. There are monthly ones you can look at those and get a few cents, maybe 10 cents. Just be careful on those. Some of those have high dividend yields, which is the percentage of the dividend to what you're paying for them. But there's usually problems with those, so you have to be a little careful and make sure you get, ones that are going to be in business or keep paying it. Um, it is free money, so if it goes down and you sell it and have to buy another stock, it's not like you're out money, but you're better off not having to do that in the first place. So that's pretty much what this video is about. Just to try to get you started, get you familiar with the platforms, see how investing works, and get you started, and maybe then you can start finding other ways to get money or like I said, the referral links, there's nothing special about those. So if you have friends or family that are thinking about using one of these platforms, you can sign up and then talk to them and then have them use your referral link, and then you get more free stocks. And they go, it's not a pyramid scheme where, I'm going to get a percentage off of it since I was the first one in to get you in and go. It's just one level deep, and it's just to get customers. And I'm not sure how long any of these programs are going to last. They always say they'll last till about the end of the month, and then they renew them, but there's no guarantee. So the links I'm giving you, I think, go to the end of November 2020. So, well, like I said, once you get your link, get your account, then you can, if you know other people, and Robinhood is pretty popular with younger people, and Webull, is out there also, and M1 Finance, people like that, because that is kind of like not a real robo investor, but you set your percentages and stuff, and then as you get dividends in it, and it used to be $10, I think it's $20 now, then it reinvest it and try to keep it even and balanced out for you. So it's a way, if you're not really an active investor, to set your percentages, and then if you do have money going over there every so often, it will invest it automatically. It invests it once a day, twice if you pay extra. I do not pay extra for the other features they have. So with that one, you're not gonna, buy a stock when it's cheap and hope it goes up. It's like 10 o'clock in the morning. They do a big buy, probably because it's cheaper, better for them, or they get a kickback that's higher by doing that. So I would look at all these platforms, see which ones, work the best for you and what you're doing, or find somebody, a family member, friend, coworker that you currently that you can talk to and see how they're doing it. And that I would not sign up for these for day trading. I would stay away from day trading. I do not day trade. I know people do it because, like I said, dividend investing, when you do the math, it takes a lot of money to see any big returns. So, Robinhood, I've used. I don't really use now. I got like $10 there from the free stock. I put some money in, did some stuff, and then took it out. It was just too simple for me. But if you know what stock you want and you just want to buy it, hold it, reinvest the dividends. You can get some cryptocurrencies on there too. It's not really where you're buying the cryptocurrency. Like you can go out and then buy some, use cryptocurrency on some other site. You're just buying like a share of it or a partial share of it or something like that. Think of it not as really buying that currency. Webull just started it. They don't offer as many um, cryptocurrencies as those, but cryptocurrencies do not pay dividends. But if you think, oh, I want to put a little money in that, just see, or I'll be able to do that with your whatever money you have or are thinking about. You can do that on there, but uh, and if you think it's gonna be the thing of the future, go for it. I'm not saying one way or another. Uh, it's a lot higher than I ever, Bitcoin's gotten a lot higher than I ever would have thought it was for no tangible objects. It's all digital. So just do your research, make sure you get, what fits your investment style and what you want to accomplish. Don't listen to me or some other guy on the internet just rambling on about investing. So Webull has a little bit better research type options than Robinhood. It's kind of more for the technical investor, which technical investors are people who are looking at how the stock's going up or down, or how many times it's gone up or down, and things like that. I'm really not a technical investor, so if that's your thing, then Webull's probably more suited for you, or maybe even some of the other sites that I don't know about or don't use. Um, M1 financing, people like that, and I liked it because it was one of the first ones that allowed fractional shares, but it got kind of confusing for me. You can get pretty confusing because it has what it calls pies, and then it allows you to put pies inside of pies, and that just got too confusing. So I do still have around $100 or $200 over there. So, um, and only two um, stocks are ETFs. ETFs are just a group of funds or stocks. You can go that way too, and some of them pay dividends if you'd rather that way, so you're not putting all your money into one stock and hoping it does well or keeps paying. They usually pay, ETFs usually pay a little bit less than one stock you would pick out. They do charge a fee, which um, it's lower than mutual funds. Mutual funds are more managed. ETFs usually try to just go along and match a certain goal, like the S&P 500, NASDAQ, something like that, or by category. So you could look at those if you want. They do pay a dividend. It's less than just one stock you could probably find, but it does take some of the risk off of just owning one stock. Um, so, but and M1 Finance, it does the pie thing, so you can divide your pie into sections, and it tries every time it invests for you, it tries to match the percentage you said how you wanted your pie. They do not have to be equal slices. You can have 50%, 25, and 25, and something else. So, or you can own up to 100 different stocks. So, however you want to divide it up, if you do 1% for $100 and get a $1 out of 100 different stocks every time, you could do that. And that's what I thought I was going to do, but it got too confusing, and I went to a simpler thing where it was just, the bonds and ETFs, just to see how that works. So I would recommend something like that. Again, um, get started investing now. If you can't find any money, this is some ways to get some free stocks to start with and see how it works. It has changed a lot. I've been investing for a long time before the internet, and when you used to get the newspaper and see what the stock did the day before, or things like that. So with the internet and these other investment firms, it has changed quite a bit. So you can be more involved than you were before, where before you had to call a broker, watch. They had ticker machines and all that. So hopefully you find something to get you started, and that encourages you to go on, whether it's family members, friends, coworkers you can talk to, and get going, or just start on your own and then try to talk to other people and try to help them get started in investing. It's really, like I said, it is a slow processing. If you don't have a lot of money, it's easier to make money if you have money. If you don't have money, you're going to have to really work to do it, but you really need to get started and see if you can do it. If you can't, you can sell the stock, take the $10 or whatever, and do whatever you want with it. But at least give it a shot, see if it works for you. check into the 401k if you're working um, at your employer, and they say go with the match that your employer gives you. It's free money, and you get that kind of return for just investing. So if you can't do that, do the whole match. Do as much as you can, but get started some way. And that one you don't really have to mess with. It comes out of your paycheck, goes in. But I can't say it enough. You'd really need to get started and do something. Otherwise, you're gonna be old and still not have any money. And if you're old now, at least you can start and see and maybe get a little something started for you and maybe make some money. So when you retire, you can take it out, not live off the dividends, but maybe it has gained enough to give you a little extra in retirement. Thanks for listening. Good luck. We'll post the links below. Bye.